In this video, I'm going to show you how to pick options to trade. We're going to be looking at trading debit spreads, either call debit spreads or put debit spreads. An example of two trades that I posted on the private Discord server last week had over 900% returns. If you want to join the Discord, you can. It's less than a Starbucks a month. It's only $5. And it's on that Discord where you're going to get notified of live trade alerts like these trades that posted returns greater than 900%. So step number one is you are going to look for stocks that have an upcoming catalyst. There are a couple ways that you can find stocks that have upcoming catalysts. Probably the easiest way is to take a look at an earnings calendar to see which stocks are going to be reporting earnings in the upcoming week. Another way to find stocks that have catalysts upcoming is to search for news on a website like Seeking Alpha. Seeking Alpha usually uploads over the weekend a catalyst watch, and they go over major events for the week. You can read through an article like this or read through the news feed to see if any particular news catches your interest and can serve as a catalyst. And then another way that I look for stocks that have an upcoming catalyst is I look for stocks that have high implied volatility. And I do this through a custom screener or scanner. But the high implied volatility is basically saying that the market is suggesting that there is a move coming. Now, typically when there is high implied volatility, you do not want to be a buyer of options because options are going to cost more. The reason why we're talking about debit spreads is because it helps reduce the cost of entry and helps reduce the impact of high implied volatility. The best way I can explain this is to relate this to the car market today. Right now, car prices are through the roof. So if you are to buy a new car, it's going to cost you a lot. But if you have a trade-in, your trade-in in value is going to be higher than it was before, helping offset some of that increase in the new car price or the price of the car you are purchasing. This is exactly what happens with spreads. You are a buyer of one option, a seller of another, helping reduce the impact of high implied volatility. Now, step number two is the first step before you actually dive into the options chain. Step number two involves taking a look at the charts and starting to do technical analysis on the stocks that you found in step number one. To keep this simple, we want to look for stocks that are doing one thing. And that is that they are trading in a range, and preferably they are in the middle of that range right now. So the first thing that we need to do is we need to draw support and resistance lines. But it's important on what time frame you draw support and resistance lines. I personally focus on the daily chart, the weekly chart, and the monthly chart. So what I personally do is on my charts, I have green horizontal lines for support and resistance that represent the daily. Daily for dollar, the dollar is green. I have white horizontal lines that represent support or resistance lines that correspond to the weekly chart. W for white. And then I have a maroon reddish color for the monthly. Here's an example of me doing technical analysis on an upcoming trade. All right, here's an example of me doing the technical analysis on my phone, and we're on the Webull application. If you want to sign up with Webull, use the link in the bio, sign up, deposit $100 so this channel does get some benefit, and you will get 6 free stocks valued up to $12,600. So we just need to select daily down below, and all we need to do is draw horizontal lines at points where the stock has been rejected multiple times or bounced multiple times. So what we're going to do is we're going to click on the new drawing. So on the bottom right, the chart toolbox, we're going to hit draw, and then we're going to hit a horizontal line. And we want this to be a greenish, and I like to have them dashed. So green dash horizontal line for the daily. And I can see that right now there's like a triple top right up here at around $28.50. We also have a low, so we're going to draw another horizontal line at the low here. And then we have another grouping right around here. So we're going to add another horizontal line. And right here, there's another little grouping. We also want to take a look at the weekly. So we'll head to the weekly, and we can see that the daily upper one corresponds to the peaks on the weekly chart. So all I'm going to do is I'm going to change that to a white line. Now I'm really only interested in a short-term trade. I can draw more technicals on the weekly if I wanted to. Now step number 3 is when we actually dive into the options chain. And step number 3 is finding high quality trades that have a high risk to reward ratio. We're looking for around 10 to 1. The higher the better. In theory, you can be wrong 9 out of 10 trades and you still will break even. The goal, if you can achieve this, is to be right on a quarter or a third of the trades, and then you will be a very profitable trader. Now on top of that, it's also important that you just don't go so far out of the money on your trades to get that 10 to 1 risk to reward ratio. You need to fall back onto the technical analysis you did in step number 2 to identify the strike prices of the options you are going to be buying, to identify your target price. Here's an example of me looking for an option to pick. Now we have our range here, $28 on the high side, $20 or $15 on the low side. And I'm personally leaning bullish because the momentum has been strong, and I think we're going to retest those highs, the resistance at $28. So now we need to go and take a look at options. So first off, we need to go to the options chain, and we're going to look for the bullish case first. So I need to switch this over to calls, and we're going to look for options that expire on August 12th. That's 2 days after earnings. We think earnings can serve as a catalyst for safe. It might work out, it might not work out, but we're just looking for high quality trades. So first and foremost, we have the $28 is the high end, and currently the last price of that was 0.06. As you can see by this options chain, but it has very, very low volume. As you can see, the volume on Friday was 0. It was 0 for the $27.50 strike and the $27 strike as well. Now, interesting enough, if we go into our range a little bit and we take a look at the $25 strike, we can see that the last price on that was 15 cents in premium. The $25.50 strike was 0.08 and the $26 strike was 0.05. So with all of these being within our range under $28, I'm okay trading any of these. I just want high risk to reward ratios. Heading back to the options chain, if we look at the $25.50 strike minus the $26 strike, $8 minus $5, that is a $3 cost. But let's just do the math. So it's 0.5 minus 0.03 divided by 0.03. And that's a 15.6 to 1 risk to reward ratio on that spread. And that spread is in our range. Now, many brokerages make it very easy to trade this. If we go to Webull, we can hit a vertical, and it's already set up for a 50-cent spread difference. So what we're going to do is we're going to pick the spread that we want to trade. In our case, it was that $25.50 strike and the $26 strike spread. So we're going to click on that. Then we are going to enter in our limit price based on the difference between the last price of those two spreads or those two call options, which was 0.03, I believe. But we could enter into something at 0.04 and still get our risk to reward ratio. Then we're going to pick the amount of contracts that we want to trade. Every contract is $3. So what we can do is we can buy 20 contracts or whatever you choose. So it's going to cost us $60. Like I said, that's our total debit in this trade. And our max profit is $940. So for this trade, all we need is we need to see Spirit Airlines get above $26 by the end of the week, and we will convert $60 into $940. All right, there you have it. That is how you pick options to trade. In this video, I went over my process and what works for me. I do this every single week, and when I identify trades, I post on the private Discord server. The link is in the bio, and like I said, it's super cheap. It's only $5 a month. And I also thank you so much for your time. Thanks for watching this video. And if you have any future video recommendations, please comment. This is We Are Investing, and together we are invincible.